Okay, and welcome back, students who are taking financial accounting. And in this series of videos, we are working on the assigned homework problems from the digital study guide for Chapter 10, the short exercises. Note, accounting is about understanding the concepts and then applying that understanding to the situation at hand. If you get the application aspect wrong, that is one thing and is easily remedied by watching someone else work the problem. However, if you don't understand the underlying concepts, that's a whole other thing. Watching a problem worked out will not help you if you don't understand the underlying concepts. Go back and study the text material again and watch the theory videos. If you still don't understand the concepts, then either email or telephone an instructor to get help with that understanding. All right, so we finished with number 9 last video, so we're on number 10. And let me get my pen. Okay, it says here, comparing cash and stock dividends. So compare and contrast the accounting for stock dividends, cash dividends, and stock dividends. In the space provided, insert either cash dividend or stock dividend or both to complete each of the following statements. Okay, so number 1, it says increase paid in capital by the same amount that they decreased retained earnings. Okay, so we're increasing the paid in capital by the same amount that they decrease retained earnings. We're not affecting cash at all, so this would be a stock. This would be a stock dividend. Right, so a decrease both total assets and total stockholders' equity. Okay, so we're if we're affecting our assets, then that means it has to be a cash dividend because we affect cash, right? Decrease retained earnings. Okay, both since we're only dealing with the retained earnings account, that's going to be both because both the stock dividend, cash dividend gets paid out of the retained earnings and have no effect on a liability. That would be a stock dividend because when they pay out the stock dividend, all you're doing is moving from one account, all right, from retained earnings to the stock account or the paid in capital. There is no liability, whereas with the cash dividend, you declare the dividend, all right? Then you have the date of record, which is anybody who's on record of as of that date will get paid the dividend, all right? And then of course you have the payment date. Okay, so when they declare it, they're taking the money out of the retained earnings, and we're putting it into a dividend payable account because it sits in there as a liability because we owe it, and it doesn't get paid until the payment date, which is in the future. So, that the cash dividend affects the liability account, whereas the stock dividend does not. Okay. All right. Next exercise, accounting for stock splits. Suppose Nolan Inc. has common stock, $8 par, 500,000 shares. Authorized, 120,000 shares issued and outstanding. The company also has paid in capital in excess of par. Common of 225 and retained earnings of 298,000. The company decided to split its common stock 2-for-1 in order to increase the market price of the stock. The company's stock was trading at 26 per share immediately before the split. Show how the stockholders' equity section of Nolan's balance sheet would have appeared after the stock split. Okay, so I'm going to just do this. I'm not formatting, so I'm taking shortcuts and liberty here. But we're going to, under the stockholders' equity, um, let's see here, we have the paid in capital. Okay, and under paid in capital, we're going to have common stock. Right now, the common stock has an $8 par, but because it was split, now the par is only going to be $4, right? And we had 500,000 shares authorized, so since it's 2 for 1, now there's double the shares. So now there's 1 million shares authorized. I'm abbreviating here. Okay. 120,000 shares, since it's a 2 for 1 split. We cut the price in half, and so that's in half, but the number of shares doubles. Okay, that's because it's a 2 for 1 split. So we have 120 times 2 is 240,000 shares issued and outstanding. Okay, and 240,000 times $4 a share is 960,000. So that's going to show as 960,000 on the balance sheet. Okay, next we have the paid in capital in excess of par. Common is going to remain the 225,000. Okay, that isn't going to change. So our total paid in capital is going to be, let's do the math, 1,185,000. And then we have retained earnings. And our retained earnings was 298,000. And so our total equity is, let's see, 1,483,000. Okay, right. And then it says number 2, which account balances changed after the stock split? Which account balances were unchanged? Which account balances changed after this? Okay, the balances in the accounts. So even though this information changed, right? Even though this information changed, these balances haven't changed at all. Okay, it's just because when you have a stock split, whether it's a normal stock split 2 for 1, or a reverse stock split, which is a 1 for 10, which is a common type of thing, you still have the same value in those accounts. What you're doing is you're changing the amount of shares versus the dollar per share, but the value doesn't change at that moment. The change in, like for a 2 for 1 split, in this case here, the par was 8, and now it's only 4. Okay, that makes it more attractive because more people can afford the $4 share than they could the $8 share. So this entices people to pay to buy the stock, and that's why they one of the reasons why they would split a stock. But you don't just create money out of nowhere just because you have a stock split. you know, if the price, and I'm just going to draw a chart here, all right, if this is $4 and the price goes up here to $8, right, dollars, and then they split it and it goes back down to 4, okay, the value still stays the same, because if this was $4 a share at, you know, let's say there was 1,000 shares, right, 1,000 shares. Now 8 at 1,000 is $8,000, right? Here it's only 4,000. Okay, but when they split it and it goes back down to 4, now the price is in half, because we have 8 divided by 2 gives us the 4, but instead of having 1,000 shares, it's 1,000 times 2 is 8,000, right? So we have, at $4 a share, you still have a value of $8,000, okay? It was $8,000 up here, and it's still $8,000 down here, although the price is different. All right, so go back and watch the theory videos, and there's not much more to say about that, and I'm going to stop here because the next exercise, I believe, is on treasury stock, so it's a good split off point instead of continuing on. See you in the next video.